let's do some critical calculations, and I'll also show you a very simple way for you to know how much taxes you'll be paying without doing all of these calculations. But let's do the calculations first so that you can have good understanding and idea of how these things are done. Hey guys, it's your girl WeScreen back again with another video. If this is your first time on my channel, thank you so much for joining. On this channel, I share information on personal finance, fashion, and lifestyle. So if you're new here, please consider subscribing below and ensure you turn post notification bell on. And if you're a returning subscriber, you know the vibes, please give this video a thumbs up. Don't hesitate to leave a comment below, and don't forget to share with your friends as well. As you can see from the title in today's video, we will be talking about how income taxes works in Canada. So without further ado guys, let's get started. So the first thing we'll be covering is some basic terminologies about taxation in Canada, so that this way when I say something alongside or later on in the video, it doesn't sound strange to you and you're pretty much familiar with what it means. I'll try as much as possible to keep it very simple, layman friendly, and beginner friendly as well. So the first terminology is gross income. So gross income is how much that would be stated on your employment letter or your offer letter as your income for the year. So it could be salary, it could be wages, it could be annual income as well, or hourly rate. Another terminology is tax deductions. These are amounts or expenses that you can use to legally reduce your taxable income. Example of tax deductions could be child care expenses or home office expenses or moving expenses as well. Another terminology we'll be using here is taxable income. Taxable income is the difference between your gross income and your tax deductions. So once you do that mathematics and you come up with all of the tax deductions that you have and you minus this from your gross income, what you have left is your taxable income. And your taxable income is the amount of which your taxes would be charged or calculated on. Also, we have tax payable. Tax payable is the amount of taxes you owe. So once a tax rate has been applied on your taxable income and the calculations have been done, then the amount you get after the tax rate has been applied would be your tax payable. Another terminology could be tax credit. So tax credit is like a dollar for dollar reduction of your tax payable. So it could be tuition credit, it could be GST credit as well. There are lots of tax credits. It could also be refundable and it could be non-refundable. So we're not going to go into all of that details right now, but that's what tax credits mean. So amounts that reduces your tax payable. We have tax bracket. Think of tax bracket like a tax bucket or income tax range that is taxed at a given rate. So tax bracket is pretty much a given range of income that is taxed at a given rate. Now that we've gotten all of those terminologies and definitions out of the way, the next thing is to move on to how taxes work in Canada. So in Canada, we use the graduated tax system, or you could also call it a progressive tax system, which means you get taxed more as you earn more. Everyone gets to enjoy the benefit of paying a lower tax until the point they start to earn a higher tax income, and that is how the progressive tax income system works. So you pay from the lower tax bracket up until when you start to earn higher income. So the more you earn, the more taxes you pay. The higher your income, the higher your taxes. That's pretty much a simple explanation of how tax system works here. I know now that I've explained that with more income you get to pay more taxes, you probably start wondering, are you better off earning more income, or should you just stay at your current income and not seek for more income just because you don't want to pay more taxes? Don't get this misconstrued, because this is a popular misconception. A lot of people think that when they earn more income they would pay more tax, which technically is correct, but you have to understand that you are always better off earning more income, because no matter the amount of taxes you get charged, you would still have a high net income left after taxes. So definitely, if you have the chance to increase your income or you have the opportunity to earn higher pay, definitely go for it, because you are always better off with higher income than lower income, regardless of the tax rate. Another very important thing to make note of here is that in Canada, income taxes are usually charged by federal government and the provincial government. So there are different tax rates for each provinces, but the federal tax rate remains flat and the same for everyone across Canada. So regardless of what province you reside in, then your taxes would remain the same for the federal level, but the provincial level could be taxed at a different rate or different tax bracket. We're going to do a very good example in a bit, and also it's worthy to mention that the provincial taxes is usually determined by the province you reside in on the 31st day of the tax year. If, for instance, you move from British Columbia to Ontario in November of that tax year and you reside in Ontario till the end of the tax year, then your provincial taxes will be determined based on Ontario taxes plus the federal taxes, and not British Columbia taxes because you moved or you stayed there for the most part of the year. So that's also a very important thing for you to note. So let's do some critical calculations, and I'll also show you a very simple way for you to know how much taxes you'll be paying without doing all of these calculations. But let's do the calculations first so that you can have good understanding and idea of how these things are done. So let's have an example. We have a resident of Canada that moved from British Columbia to Ontario on, say, November, and is earning an annual income of $120,000 a year. So let's calculate how much his federal taxes would be and how much his provincial taxes would be based on the tax bracket. Let's go to my computer. So let's take a critical example here of an Ontario resident with a taxable income of $120,000. So this is the tax bracket for federal income taxes for tax year 2022, and we are going to be doing the calculations. Like I said earlier, we use a progressive tax system. So this person's taxes, the first $50,197,000 will be taxed at 15%. So let's do that calculation first. So here we have $50,000, 197 multiplied by 15%, and that would give us, let me bring up my calculator. So we have 197 multiplied by 0.15, and that is 7,152. So this person's first taxes is 7,000. So 50,000. So on the first amount, we are going to be charging taxes at 7,592.55. The second tax bracket would be the next amount that falls within this tax window here. So we have 100,392 minus 50,198, and we'll tax that at the amount of 20%, 0.5. So that will be the next tax rate. So we have 100,392,000 minus 50,198, and this would be multiplied by 20.5%. So I'm just going to put this in bracket just so we know that we are doing the calculation for this tax rate. Okay, and we are going to be having equal to, bring up my calculator again, 100,392 minus 50,198 multiplied by 0.025. So this would be 10,289.77. That would be the next taxes that this guy will be taxed on. Okay, so now the rest of the amount, which is 120,000, falls into this tax bracket, and now we are going to be taking 120,000 minus the upper tax, the lower tax limit, which would be, put this in bracket again, 120,000 minus 100,393 equal to, multiplied by 26%. then the amount we get here would be the amount for that tax bracket. So that would be 120,000 minus 100,393 multiplied by 0.26%. 55,000, and put this in dollars, 5,097.82. The total tax payable for this person would now be the summation of all these three taxes at different tax brackets. So that would be plus 10,289.77 plus 5,092.82. That would be 22,912.14. So total tax payable here would be 22,912.14. Okay, this is the accurate and correct way to calculate this, unlike what most people think this calculation is. So what most people would think is that since this person is earning $120,000, they will be taxed at 26%, and that would be giving you an incorrect amount. So let's say you're saying you're charging taxes at 120,000 multiplied, sorry, I made that mistake, multiplied by 26%, and this is what most people think this calculation is. And this would make you seem to have a higher tax payable, which is incorrect. This is completely incorrect. So for most people that assume these calculations, it is completely wrong. This is the correct way to go about this calculation. Okay, so after the federal income taxes have been calculated, then we would also have the calculation for the provincial taxes. So let me quickly do the provincial taxes and I'll be right back. Okay, so I'm back. I did the calculation for Ontario provincial tax for 2022, and this is the amount. So this is the tax bracket in case you need to have this information on hand. I will also leave the link in the description as well. So the tax bracket is 0 to 46,226. You pay this percentage, and this guy with the income of 120,000 falls within this tax range. He gets taxed the difference between 46,227 and 92,454 at this rate, and he gets taxed the last 120,000 minus 92,455 at this rate. And this is where what all of these calculations summed up to. So the provincial tax payable by this person would be $9,638.20. By the time we calculate the federal tax payable and the provincial tax payable, that would give us the total taxes and the net income once we deduct that from the taxable income. So I'll just pull up my calculator here and say 22,196.94 plus 9638.20. This would be 32,000. So sum of these two would be 32,055.14, and this is the tax payable. I can as well make this total tax payable. Okay, and to get the net income, we will just deduct this from 120,000 minus $120,000. Then what we have left would be, let me put that in orange, what we'll have left would be is net income, which would be 87,444.86. Okay, that would be his net income. Let's just put that in maybe orange. Okay, yeah, that works. Okay, so this is the calculation of how net income and how provincial income taxes in Canada would be calculated. Okay, if you want, you can pause, you can replay, just to have a better understanding of how these things are done. Now, would I recommend you going through all of this calculation just to get the amount? Obviously not. There is an easy way to go about this process, which I'll show you right now. So the easy way to go about this calculation, instead of doing all of these mathematics that I have here, which can be very, very confusing, would be to use the income tax calculator. So this is the income tax calculator. This is my favorite one. There are a lot of online calculator that you can use, but talent.com is my favorite one, simply because you get to put in the amount and you can change by province, can decide if it's an hourly rate or annual rate. You can also see how much you'll be getting paid by weekly, monthly, or by hour, depending on how your pay schedule is. So let's say your annual income is at $100,000 and you live in let's use Alberta, and you calculate. So this will tell you how much the federal taxes is, which is usually the same for everyone, the provincial taxes, CPP, EI deduction, and will give you an estimate of your net pay. Remember, everybody's tax situation is not always the same thing, so it might vary from person to person. You might have ways to claim deductible expenses and your income tax would reduce, and someone else might have more income later on in the year and they will be required to pay more taxes. So let's just try Ontario as well, just to show you that the federal taxes remains the same. Calculate. As you can see, if you lived in province like Ontario, your federal taxes remains the same. However, your provincial taxes have increased, and this is the average tax rate you'll be paying. Okay. Another tax calculator I like to use is EY. EY tax calculator also allows you to see how much your taxes would be based on your province. You can see the taxable income and after tax. You just need to put in here your income, then you calculate. Once you calculate, you can see based on the province, you see your taxable income and after tax income, the average tax rate and marginal tax rate. I personally prefer to use the income tax calculator by Talent, unlike the EY one, because I get to see my bi-weekly pay, especially when I'm negotiating salary for a new job. I would leave the two links in the description box so you can see which one you prefer to use, but this is the calculation that goes behind all of those numbers you see right here. Okay, now that we've seen example of how the tax system works and the calculation, and we have also seen how to use the online calculator to determine your tax payable and how much you'll be owing in taxes, I hope you guys have learned something. If you did, please leave a comment below and let me know. If you also have questions, don't hesitate to leave your questions below. I'm more than happy to take them. I would leave all of the relevant and useful links in the description box. Don't forget to subscribe if you're yet to do so. Thumbs up this video, and I'll see you guys in my next video. In the meantime, stay confident. Bye guys.